Greetings to one and all. Today I am going to talk about a very interesting topic which is relevant for both CA Final and CA Inter. That is CARO 2020. Okay? Company Auditors Report Order 2020. Just like laptops and PCs have different versions, we are learning the 2020 version of CARO. I'm warning you, not a warning, I'm telling you, this is not a very detailed discussion of Caro. This is going to be a very brief discussion of Caro. In this discussion, we will be covering about what is the applicability of Caro. Then we will be learning about inapplicability of Caro. Then we will be learning about paragraph 3, that 21 clauses, the toughest part of Caro. That's it. So let's begin, guys. Okay guys, we are going to learn the first topic of company's Auditors Report Order 2020, that is regarding applicability. This CARO is applicable to all types of companies, including foreign companies. You cannot escape by saying that I am a foreign company, CARO is not applicable to me. No, it is applicable to every types of company. And we are going to learn about inapplicability of CARO. It is inapplicable to banking companies, first one, insurance companies, then Section 8 companies, OPC companies, small companies and private limited companies. For these 6 types of companies, CARO is not applicable, guys. But in the case of private companies, they have to satisfy certain additional conditions after which only CARO will be inapplicable to them. So, if any of these conditions are violated, automatically CARO will be applicable for private companies. Generally, it is not applicable to private companies. But if any of these 4 conditions are violated, CARO is automatically applicable to private companies. Now, we are going to learn detail, guys. If you are a private company and your paid up share capital and reserves exceeds 1 crore, CARO is applicable, guys. You cannot escape. Then, if you are a subsidiary or holding company of a public company, then also CARO will be applicable for you guys. And if your borrowings from banks and financial institutions exceed 1 crore, then automatically CARO will be applicable to you if you are a private company. Then, last but not the least, total revenue, including revenue from operations. It must not exceed 10 crore. If your total revenue exceeds 10 crore, including revenue from discontinuing operations, then CARO will be applicable to you guys. Now, let's recap what we have learned till now. We learned about applicability of CARO, then we learned about inapplicability regarding banking, insurance, Section 8, OPC. I think I left out something, okay? Banking, insurance, Section 8, OPC, small and private companies. Then we learned private companies, if your paid up share capital exceeds 1 crore, applicable. If your loans and borrowings exceed 1 crore, applicable. If you are a subsidiary or holding of a public company, applicable. If your total revenue and revenue from discontinuing operations exceed 10 crore, it will be applicable. So that's all. Now we are going to go detail into the most important and toughest part of CARO. Paragraph 3. Yeah, in this paragraph 3, there are 21 clauses. If anything is adverse in these 21 clauses, the auditor has to report, guys. If you find anything adverse, you have to report. That's all. It's very simple. Now, moving on to the first clause. Fixed assets. In fixed assets, you have to see following 5 points are there or not. You have to see whether proper records are maintained for fixed assets. Then you have to see whether physical verification is conducted properly. Then you have to see whether there are proper title deeds with respect to the fixed assets. Then you have to see whether there is any revaluation conducted in periodic intervals, and if there is any variation which is about 10%, you have to report. Let me explain that with the help of an example. If there is a property with 1 crore, machinery, okay, you have a machinery with 1 crore value, and if it is revaluated to 1 crore 20 lakhs, see, there is a difference of 10%, 20 lakhs. It is 20%, guys. So you have to report that in Caro. That's all. Then, fifth one, if there is any proceedings pending with respect to Binami Transaction Prohibitions Act, nothing. You just have to see if there is any Binami property which is under prosecution. You have to report that. That's all. So let us revise again. Fixed assets, proper records, physical verification, title deeds, then revaluation about 10%, then proceedings pending as per Binami. That's all. Now moving on to the second clause regarding inventory. In inventory, you have to see whether physical verification is conducted or not. If there are any material discrepancies about 10% or you have to report that. That's all. If your physical stock and stock in books has a variance of 10%, you have to report that. That's all. 10% variation. Then next point is a little difficult to understand, but I will explain, guys. If there are any working capital loans above 5 crore on the basis of inventory. For example, your company has taken a loan above 5 crore with the security of inventory. You are going to file some returns to bank also. Yeah. And that bank returns must be matching with our financial statements. That's all. Our returns, financial statement returns and returns sent to bank, they must match. That's all. Okay. If you are having any working capital loans, that's all. 2 points. Physical verification, discrepancy about 10%. Then working capital loans above 5 crores, whether books and returns are matching. That's all. Now, moving on to the next clause. Loans and advances. In the case of loans and advances, you have to see whether the company has given loans and advances. That is the first point. Okay. Yeah. Then you have to see whether the terms of these loans and advances are they prejudicial to the interest of company. What do you mean by prejudicial, guys? Prejudicial means harmful, guys. If that loan, the terms of that loan are harmful, then it must be reported, guys. Then you have to see how repayment is made. Okay, how company is expecting repayment. That's all. That is schedule of repayment. Okay, then the company has to see, is there any loans which are overdue more than 90 days, whether the company has taken steps to get it back. That's all. As a man of common sense, if you have given a loan to another person, you must try to get back, and the auditor has to see whether this company is doing that properly or not. That's all. Okay. Now, key point, then auditor has to see whether there is any renewal of loan or any fresh loans has been issued or extended. Fresh loans here means you have given a loan and that fellow is not able to repay back. So to get back that loan, you are giving another loan. One loan given to repay another loan. You can see that. Yeah. Then you have to see whether company has given any loans which is repayable on demand. You see demand loan, that's all. Whether company has given any demand loans, that's all. So let's quickly refresh. Loans and advances. Yes, first point, loans and advances guarantee is given. Then you have to see whether terms are prejudicial. Then you have to see what is the schedule of repayment. Then you have to see whether overdue more than 90 days is there. What are the steps taken? Then you have to see whether there is any renewal, extension, such kind of things. Fresh loan issued to settle the existing loans. Then you have to see whether there are any loans which are repayable on demand. That's all, guys. Very simple. Okay. Now moving on to the fourth part. It is connected to this part. Okay. Yeah. If company is giving or making loans, investment, and guarantees, you have to see whether this section 185 and 186 is compliant. Nothing. If you are doing this kind of loans, investments, or guarantees, the auditor has to see whether this section 185 and 186 are compliant or not. That's all. Okay. Now, moving on to the next clause, public deposits. In the case of public deposits, I'm not explaining too much. You have to see whether RBI guidelines are followed or not. Then you have to see whether section 73 and 76 of Companies Act is followed or not. This is a section which governs the public deposits, guys. Okay. Then you have to see whether there is any order of tribunal regarding public deposit which affect the company. For example, if tribunal has given an order, you can't accept public deposit. No, the company can't accept public deposit. That's all. That is regarding the orders. Then you have to see whether company is doing any non-compliance, such kind of things. That's all. Very simple, guys. RBI, section 73 to 76, tribunal orders, non-compliance. That's all. Now, the sixth clause, cost records. You have to see whether these cost records are maintained as per 148. This is a section which governs cost records, guys. That's all. I'm not explaining too much, guys. Now, statutory dues. Yeah, seventh clause. There are two types of statutory dues: disputed and undisputed. We are taking the case of first case, disputed. Okay. Yeah, I think my battery is getting a low bit. Okay. Yeah. Yeah. In the case of statutory dues, if your statutory dues are undisputed and if you haven't paid it within 6 months, the auditor has to report that. Yes. Then, if it is disputed, then the auditor has to see how much amount is disputed and where it is disputed. For example, the company has some income tax dues. Then auditor has to see, this amount of dues is disputed with income tax authority. That is amount. How much amount? Then for income tax authority. That's all. Yeah. Disputed, undisputed. That's all. Sorry, undisputed and disputed. Okay. Undisputed above 6 months. Disputed amount and forum. That's all. Yeah. Now, moving on to the next clause, unrecorded transaction. If there are some unrecorded transactions, if you in the previous year, and if you recorded that in the current year or surrendered that, if already you have recorded transaction and you have cancelled that transaction, you have to report that in the current year. That's all. Okay. Previous year transaction, if it is not recorded or surrendered in the current year, you have to see that. That's all. Yeah. Now, moving on to the ninth clause, my favorite clause. I know you are seeing a person. This person looks familiar to you, Vijay Malya. Yeah, repayment of dues. In the case of repayment of dues, you have to see 6 points. What is the amount and what is the period? That's the first point. Then you have to see whether you are a willful defaulter like this guy, this fellow. Then you have to see, have you taken the loan and applied for the said purpose? That's all. If you've taken loan for one purpose and you are applying it for another purpose, do you think that's fair? No. Then you have to see whether short-term loans which are taken have been using for long-term. If you are taking loan for short-term, you can only use it for short-term, not for long-term, guys. Okay. Now the fifth point, you have to see whether you have taken loans to meet the liability of your subsidiary or joint venture. This is applicable if you are a parent. That's all. Only parent company has subsidiary and associate, guys. Okay. If you have taken loans to meet their liability, you have to report that. Okay. Then you have to see whether you have raised loans with the security of this subsidiary, associate, and joint venture. Same, it's connected to the above point, guys. If you have taken loans to meet the liability of this subsidiary and associate. 6 points. Period amount. Are you a willful defaulter? If you have used the loan for the purpose, then short term for long term, funds to meet the liability of subsidiary and associate joint venture, loans taken on the security of subsidiary, associate, joint venture. That's all. Now, moving to the 10th clause. Have you raised any money by IPO, FPO, or preferential allotment or private placement? That's all. If you have done this kind of things, if you have taken IPO and FPO, you have to see whether it is used for the purpose mentioned. Then you have to see if you have taken any preferential allotment or private placement, are you complying section 42 and 62? That's all. Two things, IPO, FPO for the purpose. If you are taking preferential allotment or private placement, section 42 and 62 complied. You have to see that these two things are that only. Okay. Yeah. Now, my favorite clause, fraud. Yeah, Satyam scam scandal. You can see that fellow. Oh, very serious fellow. Look at him. Yeah. In the case of fraud, you have to see what is the nature and amount of fraud. Then you have to see whether section 143.12 is complied or not. I'm not explaining too much regarding that. That is regarding report auditor's responsibility, sorry, liability and rights regarding fraud and all. Okay, I'm not explaining too much. Then you have to see whether is there any whistleblower complaints. Who is a whistleblower? A person who says that there is fraud, guys, there is fraud, guys. That fellow is called a whistleblower. And auditor has to see whether there is any such kind of issues are there or not. Nature amount, 143, whistleblower. These three things. Okay, that's all. Now, moving on to Niti. I can't explain too much regarding Niti. For that, you have to refer section 406 and Niti rules. Okay, I'll just give you a brief idea, guys. Okay, in the case of Niti, you have to see whether these three things are there. Net on funds to deposit ratio 1:20. Is this ratio maintained by the Niti company? That's all. Then you have to see whether Niti company is making 10% unencumbered term deposit. That's all. Niti company has to maintain 10% of its deposit as unencumbered term deposit. That's all. Then you have to see whether there is any repayment default is there regarding interest principal. That's all. Okay. Yeah. Okay. So these three things: 1:20 ratio, unencumbered term deposit ratio. That is 10% of deposit maintained or not. Then you have to see whether there is any default in repayment. Now, we are going to the next clause, related party transaction, guys. For related party transaction, Companies Act, there are some sections, 177 and 188. You just have to see whether these sections are complied or not. Then you have to see whether these transactions are disclosed or not. That's all. 177, 188, disclosure. I'm not explaining too much, guys. Now, internal audit. This is also a section which requires no explanation. Whether there is any system of internal audit is there or not. Then you have to see whether internal auditor's report is considered by the company or not. That's all. Internal audit system report considered. That's all. Now, 15th one. Non-cash transaction with directors and persons considered. If you are doing any, if the company is doing any non-cash transactions, they have to pass this this resolution in general meeting and all, as per section 192. I'm not talking too much detail. If you are doing any non-cash transactions with these directors and such kind of persons, then auditor has to see whether this section 192 is compliant or not. Non-cash transaction, see section 192 is compliant or not. That's all. Okay, that's all. Yes, 16th clause. It is regarding registration under RTA Act. Okay, see, you can see that. Okay, there are four subclauses. The first thing is that you have to see whether section 45 IA registration is taken or not. Okay, let me see, scroll up, guys. Okay, yeah, registration with RBI. Okay, the first thing is that you have to see whether you are having this 45 IA registration regarding this NBFC registration and all. Okay, that is the first point. Then you have to see if your company is doing this NBFC activities such as housing finance, NBFC without certificate of registration. It's not written, guys. It's an error, guys. You have to see whether certificate of registration is there for this NBFC or housing finance. If not there, you have to report, guys. Then you have to see whether if your company is a core investment company, you have to see whether it is fulfilling the criteria as required or if it is exempted or. That's all. Then last point, if you are a core investment company, you have to see whether there are more than one core investment companies within the group. This core investment company concept is a very big, difficult to understand. I know that, guys. I can't help it, guys. I'm not explaining too much. Okay, let me revise again. You have to see whether 45 IA registration is there or not. Then you have to see NBFC activities are conducted without certificate of registration. Then you have to see if your company is a core investment company, are you fulfilling criteria as required or are you exempted? That's all. Then you have to see whether your company is a group company which is having many core investment companies. You have to give details of that companies. That's all. If you are your company has more than one core investment companies, you have to give the details. Now I will explain what is core investment company. It is a company which is used for investment. Yeah, this company has many investment. It's a parent company actually, and it is investing in its own subsidiaries and joint ventures. That's all. Core investment companies means a company which is investing in its group companies. 90% of them will be invested in the group companies. That's all. Now, moving on to the next part, cash losses. If there are any cash losses in the previous year, you have to report. That's all. Then 18th clause also, not requiring too much explanation. If there is any resignation, you have to see that. That's all. Okay. 19th clause, going concern based on ratio. You have to see whether there are any material uncertainty regarding going concern. Are you able to meet your liabilities within 1 year? That's all. For example, if you have a loan, it is due within 1 year. You have to see whether the company is able to meet that loan. That's all. Yeah. Then moving on to the next clause, CSR. As per section 135, some companies are mandatorily required to fund for CSR. Okay. Okay. There are two types of projects. In the case of ongoing projects, yeah, and not ongoing projects. In the case of not ongoing projects, you have to transfer the amount unspent to a fund specified to schedule 7. Yeah, if it is, let me explain again, guys. There are two types of unspent CSR: ongoing project and not ongoing project. In the case of not ongoing project, you have to see whether the amount unspent is transferred to Schedule 7 fund. There is a fund specified in Schedule 7. Are you transferring that within 6 months? That's all. You have to see whether this amount unspent is transferred to this fund within 6 months. Then, next one, if it is regarding to an ongoing activity, then you have to see whether it is transferred to an account specified as per section 135. Okay, two things. Not ongoing activity to the fund as per schedule 7 within 6 months. Ongoing activity, account specified as per section 130. That's all. Now, last clause. We are going to the end, guys. Yeah. If you are a group company, you have to see there are individual companies in your company. Yeah. For example, your ITC company. ITC, there are Classmates notebook, EP noodles, many brands are there. If there are any adverse comments in the CARO of EP, you have to report that in the group CARO of ITC. That's all. The paragraph number and name. Very simple, guys. Yeah. That's all. That is regarding this 21st clause. If your subsidiaries CAROs have some adverse or such kind of comments in their CARO, you have to report that in the parent CARO. That's all regarding the 21 clauses of CARO. Yes, with this I complete that, guys. Okay. So let's refresh what we have learned till now. We learned about what is CARO, applicability of CARO, inapplicability of CARO, paragraph 3, the 21 clauses, fixed asset, inventory, loans, advances, 185, 186, deposits, cost records, statutory dues, unrecorded transactions, repayment of dues, money raised, fraud, nitty company, transaction with related parties, internal audit, non-cash transactions, RBI registration, cash losses, resignation, going concern, unspent CSR, consolidated financial statement, audit report. So with this, I am ending my session. Thank you for listening to me. See you guys.